Let's talk to Robert Kaars. He's a sales trader at Ayondo. Robert, Happy New Year to you. We haven't seen you this year. You've sent some slides. Just before we kick off, right, give me the headlines on what Ayondo do as a firm.
So Ayondo is it's a spread betting CFD trading platform essentially, but we offer both social trading as well as private trading. So if you're not really got the time to invest in studying the markets or doing market research, or you might not have the skill or the knowledge of trading, then social trading is a perfect platform for you, because you're just going to auto copy any trader that's available on our platform and just get the same performance they're having. And then anyone who's an experienced trader can certainly use our self-directed platform or private trading platform and put their own trades through that and process it that way.
Understood. Okay, well, let's talk about some winners. This is a individual or an entity, okay, who are on the platform. Yeah. I have the ability to basically follow, copy trade what they're doing. Now, looking at this performance, okay, clearly a winner, okay. Is it that easy?
It's no.
It's obviously not that easy trading, as we know.
As you know, exactly. Trading's not that easy, and the main reason this trader was one of the few that was selected to look at today was obviously because of the massive drawdowns we had from Friday into Tuesday. And we can see here, sort of, if you have a look at the chart there, you can see the purple line shows the industry average, which is the Germany 30, which we always put it, that's our baseline. And then we see his performance, which is the orange line. Obviously, the Germany 30's had quite a big drop down there, whereas his performance, it still has gone down a little bit, but comparatively not quite as much. Yeah. But exactly, if you decided you wanted to follow this trader, every trade he puts through will be auto-executed. We provide a lot of information on the side in the platform as well to sort of give you an idea of who's a good trader. So, we rank them with flags. This guy's got 5 flags, for example. So
that means as good as it gets?
That's as good as it gets, exactly. But that means that they've been with us for at least a year, and they've been hitting our target requirements in order to, progress through the levels.
So is that P&L and risk reward and?
Yeah, it's all of those features, exactly. So P&L, they've got to be hitting at least 6% per annum. Not a huge amount, but better than the banks. Maximum drawdown can't exceed 25%. It's quite a high level, but it does include open positions as well. So we just don't want people to.
So mark to market overnight, you could be down 25%.
And then in the morning be
snap
up
back
significantly
up.
higher. Okay. Yeah, exactly. And then risk score. So we'll rate them 1 to 10. 1 to 4 is low risk, 5 to 7 medium, and 8 to 10 is high risk. Okay.
So if I mirror traded him, do I know what his strategy is?
You would essentially a little bit. You won't know exactly the strategy because you're not going to see, why he's entering the positions. There's no social side to it in terms of them discussing their operations.
So I can't ask up, what are we doing today,
Unfortunately,
Fred?
not exactly. Okay. It's just purely trading for the guy. But when you get onto their profile, you can see their asset allocation. So I think on the next slide we've got sort of a more detailed look into what they're trading. So here we can see a monthly breakdown of their performance, and then you also get exactly their asset allocation. So you can see that the majority of his trades or his portfolio is actually made up of the Germany 30, and then the rest of it is made up of multiple equities, mostly in the German market. Now, what this trader actually does is he normally trades long on equities, and then he'll short and hedge himself on the Germany 30. When he thinks there's going to be a bit of a drawback, he'll put some short positions into the Germany 30, which is why that makes up so
can he trade futures and options?
Can't trade options, but he can trade futures markets or just the spot market as well.
Okay, so he's effectively delta hedging if he thinks it's going a bit wonky.
Yeah,
okay, in terms of distribution, the monthly performance?
Yeah, so we can see that his highest performance is normally about 0 to 1%. That's what he's trying to hit. I'd say probably at least 1%. We can see, last year he made 12.09% return, which is it's a good performance. The year before that, 10.32. This year he's in the red, unfortunately. He's down 0.04%. But considering everything that we've been through on Friday to Tuesday, a lot of other people suffered more. He's down only 0.32%.
Understood. So okay, well, let's move on to the next candidate. Again, he's got 5 flags and he is on a risk score of 1, so he's as good as he gets. Maximum drawdown 13%, I guess, given these sort of markets.
Yeah, again, so that's a little higher than what we saw from the previous trader. The previous trader was sitting around 7-8%. So he's almost double that. But that being said, the performance that he's received is much significantly higher. He's about 74% since he started trading with us. The other trader was about 38%. So you're getting more bang for your buck, but it's also more risk. So it depends how risk averse the person is. And what's interesting, the reason that I chose this trader is because he's a Germany 30 trader as well as a Bitcoin trader.
Okay, well, let's have a look at his asset allocation.
Exactly. There you can see it there.
So there is some Bitcoin in there.
There is. It's probably about 15% of his portfolio is made up of Bitcoin, which, yeah, it's definitely a risky product, but certainly over the last few months we've been getting a lot of hype and a lot of people interested in trading that product. So we have made that available for top traders. But, you know, certain followers might have a look at his performance, think he's doing really well, but doesn't want to have the exposure to Bitcoin. So we then facilitate the option that you can choose to opt out of particular products.
Okay.
So if you don't want to follow that trader in a particular asset class, you can just set the leverage on that down to zero.
So literally you can say, I'll do all the German equities, German futures,
Exactly.
no Bitcoin. Okay,
Yeah,
well that's pretty
exactly.
smart. So he's down year to date, down 1.5%, which... Okay,
for the year,
worse, given everything that's going on.
Exactly.
All right, so let's have a look at the review slide, the weekend review. What's this telling the audience?
So this is just really a review of what happened between Friday to Tuesday. The main reason being is because I think it potentially brings some opportunity into the market. Obviously, you know, what happened was drastic. It wasn't a great result for a lot of people. A lot of people suffered from it. But I mean, the reason that we had that drop off, you know, many people are saying different things. First of all, we had Janet Yellen step down on Friday, and you now have Jay Powell coming in. So there are slight concerns whether he's going to continue the quantitative easing that's going on in the States.
Fantastic first day at the office, right?
Yeah, great day in the office,
record number of points to the downside.
Yeah, record number of points, exactly. And then obviously just before Janet Yellen leaves, she hits Wells Fargo with a large fine and they drop 9%. But off the back of that, you've got other markets or other equities that have also dropped a lot. So Apple, for example, you know, that dropped 5.6%, was trading down at $159. It's since recovered slightly. Alphabet as well, or Google, otherwise known as, dropped from dropped down to 1,068. So that's a 7.2% drop. But if you're looking at the actual fundamentals behind it, you know, if you look at what a lot of the big banks are saying, you know, they're talking about, you know, profit taking from certain institutional clients. That's why we might have seen such a drawback. There are concerns about quantitative easing with the new Fed chair in. You've got sort of the first time that real wages are going up, so they're concerned about inflation in the States as well. But all of this is, you know, subject to potentially future. At the moment, we've just seen this huge drawback because sudden panic set in. But you know, you've now got these great equities trading at, you know, a bit of a discount, so potentially that provides opportunity. Obviously, what comes with that is more volatility because of the panic we've seen. You would have seen the VIX spiked up 100% and then came back down 30%. So it is quite crazy times, but it does potentially provide, you know, a little bit of opportunity in certain equity markets, not just the States, but Europe as well. So I wanted to highlight how our investors or private traders could benefit through that as well by doing a private trading account. And you know, trading through a spread bet account, but not necessarily with leverage, because some people, you know, have a big fear of leverage. We provide a variable margin, and that allows people to trade these products the same as you would with a stockbroker. So you're putting the exact same down. You've got zero leverage, but again, you're not going to be paying brokerage fees, no capital gains tax, and you know, the only cost of that's going to be the spread. You're not going to pay anything other than that.
Okay, well that brings us nicely into the last slide, doesn't it?
Yeah.
So the advantages. So 100% margin, possibility to trade with no leverage. I think that's quite key for a lot of people, isn't it?
Yeah, there's definitely sort of not necessarily a taboo, but a fear about trading with leverage, and I can understand that if you've not done that before. You know, you can ease yourself into it. You could then drop that down to 50, 75% and slightly get familiar with it all. But we allow people to trade on 100% margin, so no leverage, which is a great tool for trading, you know, long-term investments into equities. And the benefit as well is, you know, we've got there on US dividends, so with your normal bank, you're going to be getting a 70% of the dividend. But because we're a corporation, we can claim 15% tax back and we pass that directly on to the customer. So you'd actually be getting 85% of US dividends. And yeah, then obviously the biggest advantage is no capital limits like an ISA. So you know, no 15K cap. And with SIPs, no withdrawal restrictions. I know SIPs, you're always restricted on how much you can withdraw and, you know, the age limits, things like that. So it's a real nuisance, that. And this, you know, no capital limits, no withdrawal limits. Okay.
So final thoughts, if anyone's watched this and interested, who do they get in touch with?
You can just go straight onto the Ayondo website. There's a customer support line there, and call through. My name's Robert. I can always help you out, or, you know, anyone else on the team there would be happy to help you out and walk you through whether it's the investing option or social trading, and you want to have some help finding some good social traders.
On a personal note, I would not be phoning the Bitcoin department, but there you go.
Perhaps like that.
Robert, as always, thank you very much for your time.